Good morning, student. Today is 21st April 2020. Chapter is Admission of a Partner. Lecture number 23. Under Admission of a Partner, topic is Accounting Treatment of Accumulated Profits and Loss and Reserves. First is accumulated profit. We have to pass journal entry about accumulated profit. A firm may have balance of undistributed profits and reserve, such as reserve fund, general reserve, credit balance of profit and loss account, etc. At the time of admission of a partner, all these profit and reserve belong to the old partners in their old profit sharing ratio, so these should be credited to their capital account, current account, and journal entry will be reserve fund account DR, general reserve account DR, profit and loss account DR to old partner capital or current account. It will write off among partner, among existing partner. Second topic related to accounting treatment of accumulated profit, loss and reserve is a specific fund. A specific fund. A specific fund means these fund will be a special. For example, investment fluctuation fund, reserve workmen compensation fund, etc. if there is no liability against this fund, if there is no liability against these fund, then it should be credited to all partner capital account in their old profit sharing ratio. The journal entry will be investment fluctuation fund account DR, workmen compensation fund account DR, to old partner capital or current account. These funds will be given in liability side of firm, and it will write off in credit side of old partner capital account and current account in their old ratio. Suppose a specific fund have liability against, then if it against liability, then journal entry will be workmen compensation account fund account DR, to claim workmen compensation fund account to old partner capital account, capital or current account. But suppose that if the liability against workmen compensation fund exceeds the amount of fund the excess amount be charged with revaluation account, and journal entry will be for these revaluation account DR, workmen compensation fund account DR, to claim against workmen compensation fund account. Next journal entry for accumulated loss. In the same way, accumulated losses like debit balance of profit and loss account, advertisement suspense account, deferred revenue expenditure, etc. are losses and belong to the old partners, so these items should be also written off against capital or current account of old partners in their old profit sharing ratio. The entry past will be old partner capital account, old partners capital or current account, DR, to profit and loss account. If debit balance of profit and loss given, it will given in generally asset side, to advertisement suspense account, to deferred revenue expenditure account. These items will given in asset side of balance sheet of firm, and it will also transfer into debit side of old partner capital account. Now, one more thing is, when employee provident fund EPF, employee saving account, etc. appear in liability side of balance sheet. It will not distributed among old partner, as they are not reserve but are the outside liability payable by the firm, because it is for employee. Entries for one more thing, entries for transferring the reserve and accumulated profit and loss must be passage even if the question is silent on this point. It means whether question says for distribution about these loss and accumulated profits or not, we have to distribute automatically among partner. This point should be remembered. Now I am going to solve some specific problem based on these topic. Suppose ABC are partner in a firm. A, B and C are partner in a firm in the ratio of 2:1. They admit D for 1/4 share in firm, and balance sheet show suppose this is balance sheet. Liability side amount, asset side amount. Liability side show workman compensation reserve 80,000. And question says, show the accounting information under following alternative case. First case is given if there is no other information about workman compensation reserve. Second case says, if a claim against workman compensation reserve is 50,000. Third case is, if claim against workman compensation against rupees 80,000. Fourth case is, if claim against workman compensation fund is 1 lakh. These are different situations. In all these situations, we have to prepare journal entry. Now, I am going to solve first case. For first case, journal entry will be workman compensation reserve account DR to age capital account to B's capital account to C's capital account. Being workman compensation reserve credited to old partner, and it is given in balance sheet 80,000, and case first says if there is no other information, so it will directly distributed among partner. 80,000 will shared by ABC in 2:1. So it will be 32,000 and 16,000. Second case says, if there is a claim against rupees 50,000, then journal entry will be workman compensation reserve account DR to provision for workman compensation claim account provision for workman compensation reserve claim account to age capital account to beach capital account to siege capital account. Workman compensation reserve is given 80,000 in balance sheet and claim against is 50,000, so it will be 50,000 in credit side, and remaining balance 30,000 will be shared by old partner in old ratio, that is 2:1. It will be 12,000 and 6,000. Now third case is, if a claim against rupees 80,000. Now journal entry will be workman compensation reserve account DR to provision for workman compensation reserve claim account 80,000 and 80,000. No remaining balance is for partner, so I will debit all the liability and credited claim against it. Now fourth case is workman compensation reserve is less than its claim, because claim is 1 lakh and workman compensation reserve is 80,000 only. So in case 4, journal entry will be workman compensation reserve account DR, workman compensation reserve account DR, revaluation account DR to provision for workman compensation reserve account. Here workman compensation reserve is only 80,000 and provision against workman compensation reserve is given 1 lakh. So it will 20,000 transfer in revaluation account, and when we will transfer into revaluation account, it will be loss for partner. So on the basis of above case, I will pass other journal entry also, because loss of revaluation. So journal entry will be age capital account DR, B's capital account DR, C's capital account DR to revaluation account. $20,000 will shared by old partner in old ratio. It will be 8,000, 8,000 and 4,000. Now see some other example also based on this topic. Suppose illustration is, suppose A and B were partner in a firm in the ratio of 3:1. On 1st April 2015, they admitted C as new partner for 1/5 share in profit sharing ratio. On the date of C's admission, balance sheet of A and B show a general reserve rupees 1,20,000. PL account debit balance is 60,000. Workman compensation reserve is 1,50,000. And following cases is also given in question. C brings 1,50,000 as capital and his share of goodwill in cash. Share of goodwill in cash. Goodwill of the firm is valued. Goodwill of the firm is valued 2,40,000. There is a claim of workman compensation 1 lakh, and you can see the illustration directly from book. It will be fruitful. So see the illustration of the book directly. Suppose same illustration. Krishna and Suresh were partner in a firm, but it is not clear, so I am going to write only because this is not clear. Now goodwill of the firm is valued 22,40,000. Now there is a claim against workman compensation reserve is 1,70,000. Partner decide to new profit sharing ratio will be 3:1:1. Pass necessary journal entries on the admission of C. This is your question. I repeat once again. A and B are partner in a firm in the ratio of 3:1. C is new partners joined for 1/5 share in profit. General reserve is given 1,20,000. PL account debit balance is also given 60,000 and workman compensation reserve 1,50,000. C brings 1,50,000 as capital and his share of goodwill in cash. Goodwill of the firm is valued 2,40,000. Claim against workman compensation reserve is given 1,70,000 and new profit sharing ratio of partner is 3:1:1. Pass journal entries. This is the question. Now you can see. Now journal entry. First journal entry will be for general reserve. So general reserve account DR to age capital account to B's capital account, and it is given 1,20,000. So it will distributed among partner in old ratio 3:1 and it will be 90,000 and 30,000. Next journal entry will be for profit and loss account, and here is loss given in question. Journal entry will be age capital account DR, B's capital account DR to profit and loss account, and balance of profit and loss account is given 60,000 and it will also shared in old ratio 3:1, 45,000 and 15,000. Now next journal entry will be for workman compensation. First journal entry is for reserve, general reserve. Second is PL, and third journal entry for workman compensation reserve. It is given 1,50,000 and claim against workman compensation is also given 1,70,000. So it will create our liability. Now journal entry will be workman compensation reserve account DR, revaluation account DR, 2 provision for workmen compensation reserve claim account. It is given 1,70,000 and workman compensation reserve have only 1,50,000 balance, so it will 20,000 transfer into revaluation account. Now revaluation account will create our loss also. So next journal entry will be age capital account DR, beige capital account DR, to revaluation account. Now 20,000 will shared by A and B. In old ratio it will be 15,000 and 5,000. Next journal entry will be for new partner's capital. She brings 1,50,000 as capital and his share of goodwill in cash or goodwill valued 2,40,000. So next journal entry will be bank account DR, to seize capital account, to premium for goodwill account, and capital is given 1,50,000. His share of goodwill will be 48,000. Total will be 1,98,000. Now premium for goodwill account will be distributed among partners. So journal entry will be premium for goodwill account DR, to age capital account, to beige capital account, and it will shared by old partner in sacrifice ratio 36,000 and 12,000. Sacrifice ratio also be same, it will be 3:1. So this problem have solved on the basis of accumulated profit and loss account. Thank you.